Hopefully you can all see the slides. So tonight we're going to talk about cost classifications and the high-low method. So cost classifications, anyone who's done the level 2 accounting course, certainly it's covered in principles of costing at level 2. It's then picked up again in the management accounting techniques at level 3, and then it finds its way, gets sort of mixed in with the financial accounting modules at level 3. It almost exists across lots of things, lots of units at AAT and certainly at further studies. And it's also a good skill to know the classification of cost, from a commercial point of view. So when you're working either in industry or practice, it's a important thing to know. And then we're going to look at this thing known as the high-low method, which again raises its head in management accounting at level 3 and the applied management accounting exams at level 4. So just going to jump on to the next slide. So just some of the things that we're going to try and some of the outcomes of what we're going to try and go through this evening. Hopefully we achieve all this, we've done really well. Understand the concept of cost classification and identify the 4 main categories of cost classification. So costs can be classified generally in 4 main categories. So costs can be classified by element, by nature, by function, and by behaviour. So we're going to look at that in a little bit more detail, explain what all that is. Look at what constitutes this thing known as a cost card and the various components of that, including things like direct cost, which materials, labour, expenses. This thing called prime cost, variable production overheads, so indirect cost. Understand what marginal costs are, what fixed production overheads are, the concept of exhaustion costing, and then finally what your non-production costs would be. And put together, that would constitute a cost card for a given product. Then we're going to try to distinguish between different types of cost behaviour. So this whole concept of variable cost, fixed cost, stepped fixed cost, and semi-variable cost. So we're going to look at that in quite a bit of detail, and I've got some nice graphs I'm going to show you that hopefully explains it in a bit more detail. And then the last thing we're going to do is try and apply the high-low method to calculate the variable cost per unit and total cost for semi-variable cost. So high-low methods used for these semi-variable costs, and we're going to be able to hopefully work out, split out the variable cost from the fixed element. So cost card then. So what's a cost card for a product look like? So what you've got on the screen there is just an example cost card for a product. Now, I'm going to get my little laser pointer out. This bit here, prime cost, total of all direct cost, that bit, that's the bit that businesses are generally quite good at being able to work out, because that's just all your direct cost. So I bought these materials, I've used this labour, and I've got this direct expense that's directly related to the product. Businesses are quite good at understanding that. So if we did do that, and we say that our direct cost, another word for direct cost, prime cost, if we say our prime cost are £80, which they are in this example, does that not therefore mean we could sell it for anything above £80 and make a profit? Unfortunately, that's what some businesses would think, but clearly that's not the case. We've got some additional cost above the direct cost. So we've got what are known as variable production overheads. Now they're variable because as volume increases, production overheads increase, but they're indirect. They're not directly proportionally related to a given product. So this example, £15, giving us marginal cost. Now, marginal cost, the concept of marginal costing, is the total of direct cost and variable cost. Or another way of saying that is the total of all variable cost. Because all these direct costs are variable. More you make, higher the cost. But the cost is the same per unit. So you need £50 worth of materials to build 1 unit. If you build 2, you need £100 worth in total. Yeah. So marginal cost, the total of all the direct and variable cost, or all variable cost. That's not the end of the picture, though, is it? Because we've got some extra cost. What about like things like fixed production overheads? Yeah, fixed because they don't change regardless of how much we produce or don't produce. So if you think about, you might have a production supervisor. Yeah, so you might have a supervisor in a factory. Well, it doesn't matter if we make 1 unit or 10,000 units, that supervisor still needs to be paid. Yeah, so he's very much fixed production overheads. He's related to production. His overheads are completely fixed. Yeah, you don't get paid. You know, if we make 1 or make 1,000, he still gets his wages. So fixed production overheads get added to the marginal cost to create this thing known as absorption costing, or an absorption cost, which is the total production cost. Now, it's the total production cost, not the total cost, because then you've got to add to that non-production cost. So admin overheads, so you might have a head office, yeah, and the head office has some cost, and you might need to absorb those costs into the cost of the product. Yeah, so administrative overheads, selling overheads, so selling the distribution cost, they all need to be covered by the cost of the product, or else you're going to sell the product at a loss potentially, or not make the level of profit that you were hoping to make. So that's just a general cost card. I think it's useful just to have a quick look at that before we dive into some of the other stuff. So cost classifications then. 4 key types of cost classification. Yeah. So costs can be classified by element, by nature, by function, and by behavior. Yeah. So got another slide that breaks it out in a bit more detail, which I'll come to in a minute. But ultimately, element is the element of cost. So are they materials? Yeah, which is the planks of wood here. Are they material cost? Are they labour cost? Or are they essentially other cost? Yeah. Nature. Yeah, so when we're splitting cost by nature or classifying cost by nature, we're saying, are they direct cost, so directly related to the product, or are they indirect costs that we incur, but that aren't directly related to the level of production? Function, yeah, we're just splitting the cost by the function. So we got production overheads or production cost, yeah, and then non-production cost or non-production overheads. Yeah. And then behavior is, are they fixed cost? Are they variable cost? Are they stepped fixed cost, or are they semi-variable cost? Yeah, so it's the behavior. It's how the costs behave as levels of production change. So a bit more detail here about that. Yeah. So cost classification by element. Why would you do that? Well, it's useful for cost control. Yeah, because it involves stating what the cost according to what the cost is. So you're saying we are spending £100,000 on materials. Now, if you tell someone that and they're not happy that you spend 100,000 on materials, it leads to cost control, because people then start to try to drive down what we're spending on materials, what we're spending on labour, etc. It's really good for cost control because it allows you to really break down what you're spending the money on. Cost classification by function, yeah, massively useful for financial accounting. If you think about financial accounting, that is how we classify cost. Where do they fit in the business? Yeah. So are they related to production? Yeah. So are the cost part of your cost of sales? Yeah, or are they other expenses, i.e., non-production cost? Yeah, so classifying cost by function aligns directly with financial accounting, which is why some people might do it. And then classifying cost by nature, that's classifying cost by how they relate to the cost units, useful for cost accounting. So is it direct cost or is it indirect cost? Yeah. And then the final way we classify cost, as I mentioned, is by cost behaviours. So the behaviour, how the cost behaves as levels of output or levels of sales increase. So I've got some graphs on the next slide, which hopefully will explain it without confusing everybody. So we'll start with top left, start with variable cost. So what I've got is I've got two graphs. Yeah. So the leftmost graph shows you what happens to total cost. So your total business's cost related to variable overheads. Yeah. As activity level increases, so activity level increases, goes this way. Yeah. Total cost also increases. Yeah. Now these are directly proportional. Yeah. So, for example, if we make 1 unit and it costs £1, if we make 100 units, it costs £100. Yeah. So total cost rises directly proportional to volume or activity level. Yeah. So that's what's happening. Total cost. Yeah. The average cost per unit, well, that's fixed. It doesn't change. It costs £1 per unit. So it don't matter if I make one or 1,000,001, each unit costs £1. So the average cost per unit does not change under variable cost. Yeah. So it's just the total cost increases directly proportional to volume, but the cost per unit doesn't change. Yeah. Adverse to that, fixed cost. So fixed cost, the total cost. So if you think about something like fixed cost, a fixed cost might be the rent for your factory. So if the rent for your factory is £50,000 a year, doesn't matter if you make 1 unit or 1,000,000 units, you've still got a £50,000 rent bill to pay. So the total cost is completely fixed. Yeah. So this line here, completely fixed, irrespective of what happens to their level of activity. So if you do nothing, still going to cost you 50,000. If you do 1,000,000 units, still going to cost you £50,000. It makes no difference. However, what we see is this sloping downwards curve for the average cost per unit. Yeah, because if we do 1 unit, yeah, the average cost would be 50,000. Tell I've done that before, can't you? If you did 1,000 units, cost would be £50 a unit. Yeah. So as you can see, we've got downwards curve. So the average cost per unit decreases, yeah, as activity level increases. So as activity level increases that way, average cost reduces that way. Yeah. So those are your more typical costs. So typically, not all costs, but typically costs are either fixed, i.e. rent, £50,000, it's fixed, or variable, you need to buy £5 worth of raw materials in order to make one product. So if you make 2, it's going to cost £10, 3, 15, so on and so forth. Some other types of cost behaviour you can get then are these things known as stepped fixed cost. They're called stepped because, well, they look like a pair of steps. Fixed because they are at certain points in time fixed. So what we've got here then is the total cost increases. It does generally increase as activity level increases. So as activity level increases that way, total cost is increasing that way. Now, a good example of a step fixed cost would be a supervisor. Yeah. So this is the example that AAT use all the time. Supervisor's salary cost. So a supervisor, one supervisor can supervise 10 staff. Oops. I should say 10. Yep. Let me just rub that out and just try again.
Yep. I don't know what you're rubbing out, but we can't see it.
Can you not see it?
No.
Can't see anything that I'm drawing on the slide?
No.
No.
Oh, that's really helpful. Can you see me slides?
We can
Yes.
see the behaviour slide, but then I'm trying to work out what you're rubbing out, and I'm like, no, we can't see it.
Oh,
Yeah,
I
that's
can see it.
interesting.
Can anyone else see it?
No. Yes, I can see it. This is Bunny. I can see it.
You see it now?
Okay.
You can see the cost behaviour slide, but you can't see what Dean's writing.
Oh, okay. Yes, yes, yes.
No, yeah. Yeah, we can see the slide, but we can't see what you're writing, Dean.
Oh, that's really, really helpful. Anyway, so as I was going to say, because now you can't see what I'm writing, I'll just talk it through it instead. So what we can see is this line, well, you can see that it goes up, steps up, doesn't it, at certain levels. So the typical example that AAT uses, they say that a supervisor can supervise, say, 10 staff. Yeah, so along the activity line here, let's say we get to 10 staff. So the cost is fixed from 1 member of staff to 10. And then when we get to 10 members of staff, well, we need another member of staff. So what we do is the cost will double, or the cost will go up. Yeah, cost will double because we now need 2 supervisors until we get to 20 members of staff, and then we need to hire yet another supervisor. So the cost is generally going up as activity levels increase. Yeah, but it's not like variable cost, or it's certainly not like fixed cost or variable cost. It's almost a mix of the two. Yeah. So it does go up as activity level increases, but it's not directly proportional to activity. Yeah. Really wish I could work out why you can't see what I'm drawing on the slides. But anyway, so semi-variable cost, then this, the one at the bottom. Yeah. So here you've got an element of these first 2 behaviours on the left. So variable cost and fixed cost. What you've now got is semi-variable cost. So semi-variable cost are costs that have a fixed element and a variable element. So the example I always use is your electric bill. So your household electric bill. Yeah. So your household, everybody's household, or most people's household electric bill contains 2 elements. Standing charge, which is in our case the fixed element. Yeah. And then a variable cost, which is, and the variable cost is all about how much electric do you use. So if you look at the graph, you'll see this fixed cost. Doesn't matter whether I turn the lights on, you've got to pay the standing charge. If I do turn the lights on, the more electric I use, the higher the variable cost, and therefore the higher the overall cost. Yeah. So total cost does increase, yeah, with levels of activity, but it's not truly variable in that it's not directly proportional to volume. Yeah, because it's made up of a fixed element and a variable element. So just a few more details about that then, just to recap what I've just said. Yeah, so variable cost varies with a change in activity or output. As output increases, the variable cost increase in direct proportion. If there's no activity, there's no cost. Yeah. Fixed cost, a cost that's not affected by a change in activity. So as activity increases or decreases, fixed cost remains completely constant. That's the total fixed cost. Obviously, the fixed cost per unit is going to change either up or down as volume increases or decreases. Stepped fixed costs remain fixed to certain activity levels, then rise to a new higher fixed level if activity goes beyond a certain amount. So that's just a stepped graph that I just had on the slide 2 minutes ago. So we look at a quick example then, or some examples. Pulled these out of textbook this morning, but these sort of demonstrate each of the different types of cost behaviours. We'll just work through them top down, just to make sure everyone sort of understands what we're talking about when we're talking about cost behaviours. So first one then, if a business has total variable cost of £20,000 when it produces 1,000 units, what's the variable cost per unit? A simple piece of maths then, total variable cost £20,000 to produce 1,000 units. So 20,000 divided by 1,000, therefore variable cost per unit, £20. Yeah, so if I make one, it costs £20. If I make 10, it costs £200. If I make 1,000, it costs £20,000. What would be the total variable cost then if activity levels increase to 5,000 units? Well, it's just £20 per unit, 5,000 times, so £100,000. So they're the variable. So that's showing you what happens with variable cost. Yeah. Next one then, if the business has total fixed cost of £18,000 when it produces 1,000 units, what's the fixed cost per unit? Well, same again, you're just going to take total fixed cost divided by activity, 1,000 units, yeah, to get the fixed cost per unit. In this case, 18,000 divided by 1,000, £18. If a business had total fixed cost of £18,000 when it produced 4,000 units, what's the fixed cost per unit? So same piece of maths, 18,000, but this time divided by 4,000 units, £4.50. And then the trick question, what would be the total fixed cost if activity increased to 6,000 units? Now, this is, I guarantee that there's people, there will be people on this call, and there will be people that I've taught that get that sort of question wrong. It's a fixed cost. So the total fixed cost does not change. So the total fixed cost will still be £18,000. Because overall, the fixed cost is not going to change. Yeah, so it doesn't matter if it increases to 6,000 units, goes down to 6 units, goes up to 6 million units. Yeah, the total fixed cost will always be £18,000. And then finally, a business has total fixed cost of £30,000 when it produces 1,000 units. But if it goes above this level, fixed cost increase by 25%. What would be the fixed cost if the business produced 2,000 units? Yeah, so we just need to read the question more than once. So a business has total fixed cost of 30,000. So that's our starting point, 30,000 when it produces 1,000 units. But if it goes above this level, fixed cost increase by 25%. What would be fixed cost if the business produced 2,000 units? Well, 2,000 is more than 1,000, so we've got above the 1,000 limit, above that 1,000 point, and we're told that it increases by 25%. So it's 30,000 times 1.25, £37,500. Hopefully that makes sense. Right, high-low method then. So that's all very good, what we've done up to now, yeah, but quite often we need to be able to determine fixed and variable parts of a semi-variable cost. So remember, semi-variable cost shown in this this graph halfway down the slide. Yeah, semi-variable cost, the total cost is made up of a fixed cost plus the variable cost. And obviously, if we're going to start trying to put a budget or forecast together, we need to be able to split that fixed cost and that variable cost to be able to accurately produce a budget or a forecast based on some expected level of activity or volume. So the total cost in this case, total cost is the fixed cost, plus the total variable cost. Well, another way of saying that should really be on another line, but another way of saying that is the total cost is the fixed cost plus the cost per unit, the variable cost per unit, multiplied by the number of units. So with that knowledge, we can hopefully apply this high-low method to be able to split out fixed cost from variable cost. So it sounds really complicated. It's really not. It's a 3-step process. So step 1, pick the highest and lowest levels of activity within the data set. So if you get this on an AAT exam, you'll have, it'll say cost at 200 units is this, cost at 400 units is that, cost at 800 units is that. You want the highest and lowest levels of activity and their associated cost. And then what you're trying to work out is what the variable cost per unit is. The variable cost per unit is the changing cost between essentially the highest and the lowest. Changing cost divided by the change in units. So if you've got a change of, say, 600 units, so you're going from 800 to 200, and that's explained by a £6,000 change in cost, then it's variable cost of £6 per unit, isn't it? £6,000 change in cost, 600 units, £10 a unit variable cost. Now we've got the variable cost, we can multiply the variable cost by the number of units, and that gives us the total variable cost. We know what the total cost is. We know what the total variable cost is. We can now rearrange the formula at the bottom in step 3 to work out what the fixed cost is. Because the fixed cost is the only bit we don't know. We know what this bit is, the variable cost per unit times the number of units. We know what the total cost is. We just need to substitute in what the fixed cost is. I can just rearrange the formula to do that. So a full working example then on the next slide. So on the left then we've got production units and total cost. So we can see that we've got 10,000 units, 12,000 units, 14,000 units, 15,000 units. The total cost 150,000, 170, 190, 200. So what we want to do is use, or the question, this is a typical question, using the high-low method, calculate the variable cost per unit and the total fixed cost and work out what the cost would be at an output of 17,000 units. So you've got those numbers and your boss has come along and said, right, we're expecting to do 17,000 units next month. Tell me what it's going to cost. Knowing that part of those costs are fixed cost, well, it's a semi-variable cost, part of it's fixed, part of it's variable. So you now need to be able to split all that out. So step 1 then, we're going to take the highest levels of production and the lowest levels of production and their associated cost. So we've got 15,000 units costing £200,000, and we've got 10,000 units costing £150,000. So we hopefully can see we've got a change of 5,000 units and an additional £50,000 worth of expenditure. So we've got a change of 5,000 units and a change in cost of 50,000. So 50,000 divided by the 5,000 units, and we've got variable cost per unit of £10. So then if we use the lowest level of production to substitute the numbers back in, so using 10,000 units, total cost we know to be £150,000, and that's equal to the total fixed cost, the bit we don't know, yeah, plus the total variable cost, where the total variable cost is literally variable cost per unit, £10, multiplied by the number of units, 10,000 units. So the total variable cost is £100,000, and the total cost is 150. So therefore, by rearranging that, we can work out that the total fixed cost must therefore be £50,000. And then you can apply that because we now know fixed cost is 50,000. Yep, and the variable cost per unit is £10. So now we can work out the second part of the question, which is what the total fixed cost would be at an output of 17,000 units. Quite simply, 50,000, the fixed cost, yeah, plus 10 times 17,000. Yep, so £50,000 fixed cost, £170,000 total variable cost. Therefore, the total cost or total forecasted cost at 17,000 units is £220,000. So that's it for me for that, unless anyone's got any questions. Feel free to shout up with any questions at all.